All right, hello, this is Arnold Kling, and we have Reihan Salam and our guest Michael Greve. And Reihan, you want to introduce Michael?
Yes, it is a very great honor to be talking with Michael Greve, one of my favorite legal scholars, who has written a wonderful new book, The Upside Down Constitution. In an earlier life, Michael also was part of an organization called the Center for Individual Rights, a conservative public interest law firm that has actually had a real impact on the trajectory of law relating to racial preferences and a number of other issues relating to individual rights. Michael, thanks so much for joining us.
Thanks for having me. It's a real pleasure.
So your book, at the heart of your book, is a quite radical thesis, which is that the framers had a certain conception of federalism and how it ought to work. Federalism, a term that actually only hadn't even been used at the time, but how the states should serve as a check on the exercise of public power against the citizenry. Yet, in your view, something has gone wrong with our federalism. And we've gone on this very different trajectory that you refer to as cartel federalism. Can you tell us a bit about your argument in broad outline?
Yeah, sure. I mean, one way of understanding this or of describing is to go back to first principles and ask yourself, well, why would you want a federal order as opposed to a wholly unitary state at all? And the only argument that I can think of, it's actually a very complicated argument, but you can argue that under certain circumstances, under certain conditions, federalism can serve as a check on government. It's an answer to the government monopoly problem. And then it turns out, and this is something that conservatives frequently forget, whether or not federalism can actually advance that purpose, institutionally speaking, serving as a check on government, hangs on very, very complicated economics and social structures, and also on constitutional norms that support and order a federalism structure that can serve that purpose.
So what norms do you need?
Beg your pardon?
What norms do you need?
Here's an example. You need some area that is protected from federal interference. That is sort of generally acknowledged. You need an order, and this is important, that protects competitive conditions among states. So if you allow states to exploit one another, to tax one another's, each other's citizens, you reach the opposite. Decentralization in that case and in that scenario makes things much worse for citizens overall. And you need an order that makes it very difficult for the central authorities to rope states underneath or to allow states through.
So, Michael, one aspect of your argument that I find particularly interesting, particularly in the context of how we talk about federalism today, and particularly how we talk about federalism on the right, is that there isn't necessarily a jealousy or a structural rivalry between state governments and the federal government. In fact, we often see a dynamic of collusion between state governments and federal governments, so that, for example, state governments will insulate themselves from competition against entrepreneurial state governments elsewhere by, for example, setting what some would say is a high floor for regulation. That is, resisting a quote-unquote race to the bottom represents a kind of collusion. Can you tell us a bit about that? Because on the right, people talk about defending states' rights and about, Texas Governor Rick Perry is going to fight the federal government on this issue or that issue, but you see it quite differently.
Right. This is not my argument. It was made long ago by James Buchanan in a very highfalutin, abstract way. This is just spinning it out with respect to the Constitution and how these things have shaken out over the course of American history and changed our constitutional understanding. The answer is, or the short version of the argument is, if you have a federalism order that guards against monopoly problems, that makes states compete, that allows citizens to choose their states and not the other way around, state governments as states, as we say, will hate that, right? Because it constrains them from doing what they want, which is to regulate their citizens and to tax for their constituencies' benefit. And the only way for them to arrest that tendency is to run towards the federal government and demand that the competition stop. And that is what minimum regulatory floors do. That is what federal transfer payments do, because you authorize the federal government to tax, and then the tax money flows back to the states. That is what all these transfer systems from Medicaid to education are all about. And so everywhere you look, the demand, the trend towards centralization, or as Arnold used to call it, centralization with a human face, because the states get to do their own thing under these centralized arrangements. It's not a federal imposition at all. It's an answer and a response to an authentic.
It's kind of like the idea of empire by invitation. It's centralization by invitation from the states. One objection I want to raise to you, which is what I always hear whenever I introduce the idea of competitive federalism to various friends and interlocutors, is that, people can't move all that easily from state to state. And certainly when you look at the origins of federalism, it wasn't very common to pick up stakes to move from Connecticut to South Carolina. Yet we also see some domains, for example, corporate law, and now some people are trying to introduce this vis-a-vis health insurance regulation, in which one can virtually move from. But tell me about that. I mean, that objection that, well, obviously this kind of TBU sorting, choosing the mix of services that you want, is not something that can easily be achieved, kind of across a country like the United States.
Well, actually, historically, there's a huge literature on how much force this has had in American history. Mobility has had a tremendous effect on on the way the system works. And it's usually been a force for good, even in areas where you wouldn't suspect it. Right? Black migration is a wonderful example of the beneficial effects in both periods, after the 1880s and then after the Second World War. Again, you're talking about millions of people who moved towards freedom and put pressure on their domestic systems. Was that enough? No. There's a lot of stickiness in political systems. They can't go out of business. They don't adapt with the responsiveness that we find in private markets. But the question is not perfection. Constitutional design is a question of...
Women's suffrage is another example, potentially, when you look at...
Women's suffrage is a very, very good example, right? And that's before you get into sort of group migration like the Mormons. And you have a lot of examples of this in modern times as well. I mean, if you look at sort of migratory patterns now from, the Great Lakes states and California to Nevada, Colorado, to the south, right? That's another perfect example. That doesn't mean that New York will mend its way because the interest group, or California will mend its ways, because the interest groups are just too entrenched. And I grant you that a lot of sort of economists who do sort of competitive federalism theory have overstated its effects, and it all looks much neater on a blackboard than it looks in real life. But the world's, it's a great mechanism. We need more of it. And look, there are moving costs. Yeah, there are a lot of people who can't really very easily move because they have sort of local accumulated goodwill. There are all sorts of distortions in these markets. But then again, for every one of these disadvantages, you can sort of come up with, well, what's the alternative? And the great thing about moving, voting with your feet, or virtual moving, like choosing your legal regime in contractual settings, is you can do it on your own. It's not like voting, where your vote is thrown away unless you mobilize millions of your fellow citizens.
So, Michael, one of the ironies here is that at the exact time when the factors of production have actually become more mobile, have actually enabled competitive federalism to exert more pressure on state governments, that is the exact time when we see much more collusion between the state governments and the federal government. And even now, if you look at, for example, the president's new health law and a variety of other ways in which Medicaid, the misalignment of incentives has gotten more severe, we see this further enhancement of this kind of cartel federalism that you critique. Is that a fair characterization?
Yes, that is a fair characterization. I mean, here's a sort of very tangible illustration of this. If you look at the federal tax share, the federal tax take as a share of GDP, right before 2008, when everything goes off the rails, it's about 18 to 20%. It's remarkably stable. That's through, wars and, millions of tax reforms, this way, that way, or the other. It's remarkably stable. Over the same time, tax and local, or the same time frame, state and local taxes as a percent of GDP went from 6% to over to 15%. And that's a huge, huge increase, right? That's a 150% increase over that time frame. And it's a paradox, especially for the reason that you mentioned, Ryan. There's, in all sorts of ways, mobility increased. It became cheaper to move. Industries weren't as tied anymore to places of production and to natural resources, right? It's not, the computer industry is not it's not the steel industry or the coal industry, which has to be where the coal is. So for all sorts of reasons, you should have expected enormous pressure on state and local taxation and a downward drift. And it didn't happen. It went the other way.
The states were before.
And why didn't it happen?
Federal transfer payments is the answer that every economist that I've spoken to has come up with. It's the only way to explain this. Excuse me. To explain the phenomenon at all. And the theory is that federal transfer payments that say, look, we give you 10 cents if you match the expenditure at the local level, that drives up the local demand for government, and that it does so in a very sort of invidious but also very, very efficient way. Do I think that's the entire explanation? Probably not, but it's hard to overlook or hard to think of any explanation in which that factor of the gargantuan expansion of the federal transfer state doesn't play a prominent role.
And what's happens to the incentive at the federal level? Why isn't there a countervailing incentive for Congress not to create these sort of incentives? Because they're basically saying, they're giving matching funds that they, in some sense, don't get credit for.
There are several reasons. Ideology sort of plays a very, very large role in this. The architects, for example, of the Great Society programs understood very well that the original size, the initial size of Medicaid or of the education programs did not really matter, because these things would build their own constituencies over time. Right? And if you cannot you can always, if you're on that side of the political fence, you can always tell your supporters, look, don't worry about it. This is the best we can do for the time being. Because the only alternative to this program, which is redistribution on the cheap and in a gradually expanding fashion, is no risk redistribution at all. So that's one side of the spectrum. And on the other side of the spectrum, on the conservative side, there is this enormous pull of listening to the locals and saying, please be nice to us. Please support our programs, because we are beleaguered by constituents who just demand these services, and so therefore please provide it. And mind you, especially if you look at the initial phases of the gargantuan, of the really big transfer programs that are now in existence, the original impulse for school funding, for routinized school funding in 1965, was to break the backs of Southern segregation. And that was originally a Republican program, not a Democratic program. And so that becomes sort of ideologically very mixed. No, you don't get all the credit, but you get some of the credit.
And also, just at the margin, the state and local governments have to finance their spending, unless they're getting these transfers, out of their own taxes. The federal government, you can finance it by borrowing, which it's harder for the state and local governments to do. So the way to minimize the cost on present politicians is to borrow from the federal government and hand it to the states.
Yes, or some form of borrowing. The first. There are three phases if you want. If you want to look at it that way, is from the end of the Korean War to roughly 1980, we financed this stuff, much of it in any event, through creeping inflation. And at the end, not so creeping inflation, where you pay the promises in cheaper dollars. The expansion after the Reagan administration, and there was a break in the growth of these programs during the Reagan administration. The growth after that was basically the peace dividend, which we spent 5 times over, but one of the ways in which we spent it was on state and local governments. And since then, over the course of the Bush administration and then the Obama administration, it's been entirely debt financed. So, and yes, that's an option that the states, at least on budget, don't have.
Okay. And recently, you've had these posts on the debt trap. And what's your message there?
Where do we find these posts? Just out of curiosity, I hadn't realized that you've been blogging. Is it at AEI's blog site?
No, I now blog for the Liberty Fund, libertylawsite.org.
Yeah. I'll show it on the screen.
A little cousin to Arnold's blog.
Got it. Sorry for interrupting.
No problem. And so you say we're going to end up like Argentina. How is Argentina structured, and what happens there?
Well, Argentina is every political scientist or political economist's favorite example, because it is a very dramatic example of fiscal federalism, right? A cooperative fiscal structure in action. The fiscal imbalance between between the provinces and the federal government in Argentina is much bigger than it is here. So, in the United States, state and local expenditures are now sort of about 25%, roughly speaking, federal funds. In Argentina, that figure is over 60%. Right, so most of the money that provincial governments spend in Argentina is raised first by the federal government and transferred back to the states, and that has extremely bizarre and very, very deleterious consequences. The most deleterious one among them is that provinces routinely gamble on a federal bailout. They spend like drunken sailors, bet that the feds will bail them out, and lo and behold, the federal government always does.
It sounds eerily familiar, Michael.
Beg your pardon?
This sounds eerily familiar.
Yep. There are a lot of examples. In my the country where I was born and raised, Germany has that same problem, except there are sort of institutional factors that mitigate the problem there. And so Germany has only little states that play that game. Bremen is one of the sort of chronic violators. Berlin is one of the chronic
violators. Which is why we keep trying to dissolve those smaller states.
Absolutely.
And what about
they're too small to fail.
And what about Greece? Is Greece Germany's new small state?
Well, that's an interesting. The reason why that comparison is slightly off, I think, Arnold. And it's tempting. And there's the general phenomenon of moral hazard is, of course, the same. But it plays out differently because the European Union is not a transfer state, right? That's the one thing they don't have outside the Common Agricultural Program, which is relatively small and not big enough to make a difference. They don't have. There is not an EU with tax capacity.
Although
that's the problem that drives this here.
Although there's one faction that thinks that's the solution. They cite Alexander Hamilton as as their mentor, so to speak.
Yeah, I've written a little piece about why that is nonsense. That is actually on AEI's blog. I mean, let me sort of put it this way. The European Union is actually the kind of government over governments that Alexander Hamilton vehemently opposed. That's one difference. And the second thing is, it's one thing to take over state debts, state war debts. If you're looking at an economy or at a system with huge growth prospects, right? This was America in 1788. That's actually a place where you wanted to invest, where, you know, the Dutch wanted to invest and the Brits wanted to invest, and they basically got their money's worth all the time. Who's going? I mean, what are the growth prospects for Europe? You tell me, where is the money supposed to come from? Right, so there are all sorts of differences in those respects. The reason why Argentina is sort of interesting is it is already a transfer. It's a federal system that was originally modeled on ours. It has become a transfer state on a much grander scale than ours, and here are sort of two parallels that I think are interesting and from an American vantage point actually quite menacing. The first one is that if you look at the fiscal imbalance just under Medicaid, and mind you, that's not a joke, that's 40% of the federal transfer state. The fiscal imbalance there is upwards of 67, 80% of those program costs are paid by the federal government. And after Obamacare, that's going to get worse. And you know, if you look at the Obamacare litigation now, for example, what's the state's actual demand in the Medicaid part of that litigation? Answer, this isn't enough of a bailout. You have to assume our legacy costs under this system. And I mean, more of that. And so long as we don't, you know, actually rethink that program, this is really going to look more and more like Argentina. Somebody will have to stop this and put an end to this. And so long as you run the system on the current presumption that the states get to spend money that the feds have raised, you're going to get more and more problems. That's one. And the second thing is Argentina has actually something that we don't have, which is a funding formula. There's a formula that says, okay, depending on what the state looks like and how big it is and how poor it is or how rich it is, you're getting X pesos from the federal government. We don't have that kind of a system. Even in Argentina, it's constantly broken down, and the terms of which province gets what is being haggled out between the executive and the states. And that is not a system that inspires a lot of confidence in the rule of law. And look at what is going on now under Obamacare. The bargains are haggled out one state at a time between the Secretary of Health and Human Services and each given state. That's how these insurance exchanges are going to be run. That's how the Medicaid systems are already run and have been run ever since the Clinton administration. And that sort of thing, which political scientists call executive federalism, where Congress just sits around and mobilizes itself and says, we will write a check for whatever it costs. That can't last, and that's not a system we want to live with.
Michael, listening to you and reading your posts, I thought that, you know, and I've never been a balanced budget amendment fan, but it just seems to me that the only remedy is to do something like require a balanced budget at the federal level, which would change the incentives of Congress. Any thoughts?
I'm not a big believer in balanced budget amendments for the simple reason that, you know, I've seen them in other countries and they've never worked. A different question is, so one, they've never really worked to the extent that I know. They do work in states, sort of, but that has very complicated different reasons. The states are really not in the same position here as the federal government. They can't print their own money and so forth. But one interesting approach might be to say, look, you states, fine, you have balanced budget amendments, and by by and large, they live within those boundaries. The debt buildup is in the bond market, but even more in the pension funds, because the accounting in those systems is just utterly atrocious. They calculate with rates of return that nobody believes are halfway sane. Could you, as a matter of federal law, require that, look guys, if you want to participate in these federal funding programs, you must account for all of your debts in a real and transparent way? And I think that would be constitutional, and depending on what this actually looks like at the end of the day, I might actually be strongly in favor of that.
But that doesn't solve the transfer state problem, does it?
No, it doesn't solve the transfer state problem, but it might do something to keep the local politicians honest. And quite candidly, many of them want to be more honest than they are being.
I know Ryan has some more questions. I just want to do one more, which is, do you have a solution for the transfer state problem?
The solution that was once proposed, which I think we have to get back to in one way or the other. Under the first Reagan administration, President Reagan proposed something that had been invented by the Brookings Institution, which was a welfare swap. And the way it would have worked was, look, we feds will take over Medicaid in its entirety, okay? We'll nationalize the program. And you states, in return, will take over what was then called AFDC, is now TANF, the basic welfare program, right? You will raise your own money. You will get in, so there will be no more federal transfers one way or the other. The federal Medicaid money will be spent directly on poor people, not on places and not on politicians and not on providers, on actual people who need medical care and can't afford it. And at the same time, you run your welfare system on your own. And that went up in flames, even though it would have benefited each and every state on a strict financial basis. The governors just went berserk and said, no, we're not going to take this. We want to be locked into this anti-competitive system. And we want both AFDC and Medicaid to be cooperative, quote-unquote, programs. I think if you ask state politicians from that era now, I think they want that decision back, considering what has happened to their states since then. You can't propose the identical swap now, right? It would have to look very, very different. Medicaid is just vast. I mean, it's far too big for that. But maybe you can split the populations, right? Maybe you can still say, fine, let's nationalize Medicaid. I realize how bad that sounds, but I don't see any reason. It's big enough as it is, right? If you nationalize the program, cash it out to people, run it on some reasonable basis and fund the people and take the warped incentives out of the system. A whole lot of debts and a whole lot of the problems that the states are having would disappear. So I think the conservative, the libertarian agenda has to be, we want to segregate states and from the federal government.
Although hopefully not use that term.
Not use that term. Separate.
I think that this is a
tango.
Right. Interestingly, Michael, I think that Yuval Levin, who is the editor of National Affairs and who's obviously very kind of conservative-minded, we discussed this idea of nationalizing Medicaid some time ago, and that led me to read about this swap that you described. And it's fascinating because, in a way, the talk that we have now about block granting Medicaid is, of course, a way of doing the same thing, that is trying to kind of realign the incentives so that you have some kind of meaningful separation. The objection that is, and also there are some people on the left who have talked about nationalizing Medicaid more recently for some of the same reasons. And I'm personally very sympathetic to the idea, and I think that one can make a compelling case. But I think that another issue that's come to the front of mind more recently relates to Christopher Edley Jr., who is obviously kind of coming from the left, in which states would be able to borrow against future transfers. That is, that you would actually have some system in which states would be accountable so that they could make their own decisions regarding how they want to manage their budgets over the business cycle. And I wonder what you think of that as a strategy. It seems hard to preserve that political bargain, but do you think that that might be one way forward to actually try to impose that kind of accountability, or do you think that it would be too hard for it to work politically?
I think it would make the incentives worse. I mean, I'd have to sort of look. I'm sure Chris has sort of more to say about that proposal, and I haven't seen it. But just at sort of first impression, I think that would make their incentives even worse, right? If they borrow against sort of future federal transfers. I mean, what keeps them? I mean, it presupposes that the national government then at the tail end of the day, when push comes to shove, says, no, sorry, you borrowed against, and now we want our money back and no more. Will they have the discipline will the feds have the discipline to say that? Can they pre-commit to that? I don't think so.
Ryan, do you have a wrap-up question? We're kind of running low on time. We can keep talking after, but I want to...
Oh, no. I think that we've covered a lot of ground. I guess maybe just as a last question, I wonder, Michael, how do you feel about having left behind legal activism? I mean, at the Center for Individual Rights, you were doing very different kind of work, and now having moved to this more scholarly work, I wonder if you feel as though you're having more of an impact, less of an impact, or perhaps a different kind of impact that you prefer?
It's a very good question, and quite frankly, I've been sort of torn about it in all sorts of ways. You know, the sort of 10 years at the Center for Individual Rights, that was a ton of fun, and I don't sort of regret a minute. And it was just a way of saying, I mean, to myself, well, you know, if you really want to think this through at a constitutional level, at a sort of fairly deep level, if you want to write a big book about it, you have to get away from the activism and the day-to-day stuff. And so that too has been fun. I think that what's made this sort of bearable for me and fun, actually, is that I sort of moonlight with the Competitive Enterprise Institute, which does a lot of these structural cases, and they've litigated over the public company accounting oversight board and over the tobacco cartel. And I've sort of, that's not my work, but I've stayed sort of close to it, and that's been a ton of fun. So I'm very happy with the way things are going.
Well, thanks so much for joining us. This has been a great pleasure. I certainly have learned a great deal about federalism.
Yeah, so did I.
Thanks, guys.
Okay, thank you.
Thanks a bunch.